Welcome back to the Wall Street Podcast. Our deep dive today is a fast take, zeroing in on the Anta Sports products report. That's 2020 on the Hong Kong Exchange. It's a quick report from UBS Securities Asia Limited, finalized September 21, 2025.
Right, and it's a really rapid assessment of, well, a pretty specific situation. It looks at the pressure on Anta stock after one of its controlled brands, Arc'teryx, got into some hot water in China.
Ah, the Himalayan fireworks project controversy, yes.
Exactly that. So we're looking at why that PR issue impacted the stock and, importantly, why UBS is actually sticking with its investment recommendation despite it.
Okay, let's break that down. The volatility comes from the ownership structure, right? Arc'teryx is under Anta Sports.
Correct. Anta Sports ASN on the exchange, and Anta owns about 39.5% of Ampere.
So it's a minority stake in the parent of this niche premium brand.
Right.
What's the real financial link that makes this specific headache so, well, public for Anta?
Well, the link is pretty direct. UBS estimates Anta Sports actually contributes around 10% of Anta's expected profit for 2025.
10%, okay.
And maybe more critically, China itself accounts for nearly a third, about 29% of Amere's total sales.
Ah, I see. So a PR issue specifically in China, hitting a brand strongly associated with that market through Amere, that creates a concentrated risk.
Precisely. Direct sensitivity to Chinese public opinion, even through a sub-brand.
Yet despite this, UBS kept the 12-month rating at buy. Price target HK $129, which was significantly higher than the, HK $96.80 price around September 19th.
They seem to be looking past the immediate headline risk here.
How does that exposure translate into valuation pressure, specifically on earnings, and how do they justify ignoring it?
The report suggests it's primarily a sentiment issue, maybe short-term pressure. Their long-term case, based on a three-stage DCF model, really focuses on Anta as fundamental brands.
The core Anta and Anta Kids brands.
Exactly, and they're projecting solid growth there. Net earnings is expected to grow from about RMB 10.2 billion back in 23 to around RMB 13.7 billion by the end of 25. The investment case seems pinned on that core engine.
Okay, so the model basically overrides the short-term noise. What about the longer view? What key profitability trends are supporting that buy rating out to, say, 2028?
UBS is forecasting continued improvement in profitability metrics. The core EBIT margin, for example, is projected to climb from about 23.9% estimated for 2025 up to 26.2% by 2028.
That's a healthy improvement.
It is. And maybe just as important, the forecast for equity-free cash flow yield is also expected to increase quite substantially. They see it hitting 10.0% by 2028.
So better margins, more cash flow. That suggests confidence in management's ability to execute, regardless of the Amere situation.
That seems to be the underlying message, yes.
Now, shifting gears a bit. Beyond this specific Arc'teryx brand issue, what other, perhaps more structural risks does UBS mention for the sportswear sector, or Anta in particular?
They highlight three main ones, unrelated to the fireworks incident.
Okay.
First, just a general slowdown in China's economy. That could obviously dampen demand for sportswear, especially higher-priced items.
Makes sense. Number two.
Adverse inventory and discount conditions. If the market gets too competitive or demand softens, you could see profit margins squeezed by, too much stock and heavy discounting.
Right. A race to the bottom on price. And the third.
Fashion risk, particularly concerning their high-end FILA brand. It operates in a space where staying relevant and maintaining that premium pricing is a constant challenge.
So macro risk, industry risk, and brand-specific fashion risk. Got it. This whole situation really underscores something interesting, doesn't it? How actions by a premium sort of Western-associated brand like Arc'teryx can ripple out and affect the valuation of its massive Chinese parent, Anta.
Absolutely. Anta's core business serves the Chinese mass market through thousands of stores, yet this niche brand's PR problem causes immediate turbulence for the Hong Kong-listed giant. It's a volatility multiplier effect.
Yeah, the daily consumer reaction translates almost instantly into market risk.
And what really stands out here is that volatility. A single misstep, even from a non-core brand, injects uncertainty. For you, the investor, the key question becomes, is that core EBIT margin resilience we talked about strong enough to consistently absorb these kinds of external shocks?
Does the core business justify carrying this almost geopolitical or reputational risk from the minority stake?
That's the calculation.
Okay, so here's your homework. Keep an eye on that PE ratio. Right now, it's trading at about 18.5 times forecast 2025 earnings. Not crazy high for the sector, historically.
But watch closely.
Exactly. Watch if these kinds of reputational flare-ups force management to shift focus, maybe prioritize short-term brand damage control over protecting those long-term margin improvements UBS is forecasting.